Are you ready to invest in yourself today? Welcome to the Wealth Builders Podcast, where investment leader Billy Epperhart teaches you how to build wealth through applied biblical wisdom. Scripture says in Deuteronomy 8:18, "Remember the Lord, your God, for it is He who gives you the ability to produce wealth." At Wealth Builders, our goal is to teach you how to build wealth through applied biblical wisdom in your finances, your business, and your investments. Now, let's join Billy Epperhart.
Hey guys, Billy Epperhart here, and wow, I can't believe this is our 50th podcast that we've done. And today I'm going to be talking about the economy, where we are in this podcast, and I'm going to be focusing on inflation. But one of the things that I want to say as I get started is how much we appreciate you as listeners and those of you that participate with us in Wealth Builders. And remember, if you want to follow along with the notes of this particular podcast, just remember to go to wealthbuilders.org and go to resources or to the blog. And in the section on blogs, you can find the notes on this podcast. Also, I want to say, just to remind you, we have our Wealth Builders Conference February the 18th through the 20th in Denver, Colorado. It's actually in Lone Tree, which is a suburb of Denver, at the Marriott in Lone Tree, Colorado. So that's February the 18th to the 20th. We're going to have quite a few speakers that'll be involved in Wealth Builders. And so those of you that have experienced that conference, you don't need me to say a lot more about it. You know how good those conferences are. But today, let me jump in to really where I feel like we are in the economy. And one thing that I really want to focus on in this podcast is inflation. And I remember I was actually speaking at a conference at the Men's Advance in March of 2021. And I remember being asked a lot about inflation at that time. And inflation was creeping up. It was starting to edge up in the percentage rates. But at that time, it wasn't something that was, really just glaring in the economy. We were aware of it. But as I'm sitting here now in December of 2021, inflation actually right now, this year for 2021, it's at 6.8%. And so you have a kind of a frame of reference. We haven't had this high of inflation in 40 years. As a matter of fact, the last time inflation was this high was 1982. And in 1982, it was at about 6.8%. But what a lot of people don't realize is the 1970s were actually known as the decade of inflation. And as a matter of fact, through the 1970s, inflation actually averaged about 5% annually. That means every year prices were going up 5%. In fact, I knew people at that time who were investing in real estate, which really became the very first time ever in my life I'd ever heard of anyone buying single family real estate. And let me just say, in the next podcast, I'm going to really talk about kind of the conditions that real estate is in. And I'll be sharing that with you here in the next podcast. And one of the things right now is we have a lot of money chasing real estate. So I'm going to give you some of the conditions to watch out for in the next podcast. But I remember meeting this person in the 1970s. And during that time, they actually had gotten rich back in those days by purchasing real estate. And they were buying single family homes, and they were just assuming mortgages, because back in the 1970s, there was no such thing in mortgage contracts as the due on sales clause, which means that you couldn't change the title. When it came out, it meant that you couldn't change the title. In other words, whose name was on the title, you couldn't change that. And so back in those days, in the 70s, you could do that. And so in the 1980s and in the 1990s, that was changed. And now, of course, you can't just assume somebody's mortgage. You got to qualify to be able to buy a house. So this lady was really smart, and she went around just picking up houses that people were having a hard time making the payments on. She actually assumed the mortgages straight up. She put her name on the title. It was incredible. And she began to service the mortgages. And she started really in the late 60s into the early 70s. And by the end of the 70s, she completely retired. And I remember thinking, wow, that was my first real foray into understanding, but that was during the inflation period. And so how she got rich was the real estate became way more valuable than the mortgages that she was assuming at that time. And so by doing what she did, she was able to do that. So I got off on that little rabbit trail there talking about inflation. The 1970s were known as the decade of inflation. What people don't know is that in 1980, the annual inflation rate was 14%. And that's when Ronald Reagan was elected president. And for those of you that are old enough to remember it, you remember the first thing that he did was he actually began to raise interest rates. And some of you can remember, just like I can, when interest rates got up to 17%. So he raised the interest rates, he began to raise those up, and inflation went from 14% in 1980 to 6.8% in 1982. And then they began to manage inflation, meaning the Fed, the Central Reserve Bank, began to manage interest rates through there. We've had short periods of inflation, like at 5%, like in 2010 and 2011, coming out, of course, the Great Recession. But I'm sharing this with you so you have a perspective that even in our lifetimes, for example, we've seen high inflation. But many people today that live here in 2021, the younger folk have never ever even seen it at levels like this, because it hasn't been since 1982. And so that we had 6.8%. And so one of the things that I just want to say, for example, gasoline prices right now are up 58%. Used car prices are up 31%. In some cases, it seems as though they're almost double. Hotel rooms are up 26%. Meat and some other items are up 16%. So we all are seeing this level of inflation. And so people will ask me, well, Billy, what do I do about it? Well, here's what the Fed just did about a week ago, a little over a week ago. And the first thing they did is they actually issued guidance that they were going to be more aggressive on tapering, which we'll talk about what that is in just a second. And then they also were going to be more aggressive on 3 interest rate hikes in 2022. The stock market kind of liked that news, and most economists definitely like that news because it's trying to bring a balance. And when interest rates begin to be raised, what that will do is slow down inflation because money becomes more expensive to buy. And remember, inflation is just simply when the cost of goods go up beyond, for example, what they normally were. Then that means most of the time, as some of you have heard me teach, it means you've got a whole bunch of cheap money, chasing just a few assets. And we're seeing that happen in this day. So the first thing is the Fed actually is raising interest rates in 2022, and that should help slow inflation. And I would agree with that. And then secondly, the Fed is going to begin reducing the pace of its asset purchases beginning in January. And it's going to kind of reduce it by a third, going down from 90 billion it was doing each month in what we call bond purchases down to 60 billion. So that means they're tightening the money supply, and it also means interest rates are going up in order to be able to handle inflation. So in the macroeconomic view, then what the Fed is doing is by raising interest rates. Now, they're not saying how much. And so remember, they usually call it in basis points. So like 100 basis points equals 1%. I think the expectations are that they'll probably raise it, for example, like 25 basis points, which is 0.25%, something like that. Some people think it'll be more like 0.125% raise, but they'll start slowly raising it until they start seeing inflation come down. But then people ask me, well, Billy, what do I do? In other words, what do I do with my money? What do I do during this time? So one of the things that I want to do is just share with you some of the ideas of what you can do with your money. And one of the things that I want to share is I have this article, and it's by one of the largest investors today on Wall Street, Richard Bernstein. And he has one of the largest investment advisory firms in the world. And he said that, and this is a quote from him, he said, on one side, we have all that I would call the bubble assets. Number one, he calls it tech, innovations, disruptions, cryptocurrencies. He says that whole group. And on the other side of the seesaw, you have literally everything else in the world. And what he's saying is that many of what he calls bubble assets are very similar today as what we ran into in the internet bubble in 2000. And most people have now, of course, are very familiar, at least they've heard about cryptocurrency, even though they may not understand what it is. But Bernstein says, I think cryptos are the biggest financial bubble ever in history. I think this is just a monster one. I want to just share with you today that I agree with that assessment in this sense that, and I've said this now, I think it's the third time in podcast, the actual, what they call DeFi, what's being referred to as DeFi Finance, which means it's decentralized finance. It simply means that finance is being decentralized away from the federal banks and the central banks in these countries, and the blockchain technology has allowed for that to happen. So it's going to be something like the internet, which was completely a new innovation, and here we are just 20 years later from the internet bubble, and now you can have Ring cameras and doorbells and I don't know how many things in your house that you can have hooked up to the internet that's always on and live. But you remember back in those days, we had to have dial up and it made those loud noises. So the actual technology that's behind cryptocurrency is going to be here to stay, I believe, just like the internet. Some of the companies and assets like cryptocurrency are still in such an infancy stage. And if central banks begin to regulate crypto, it's still going to be decentralized finance, but governments can actually begin to regulate it. And we don't have any idea what that's going to look like or what kind of actual result is going to happen with that. So as we're talking about this, here's a couple of things that you can do. You can talk to your financial advisors about it or whatever. But one of the things, they say, what do I do about inflation? Well, some of you have heard of what's called Treasury Inflation Protected Securities. They're called TIPS. And they're just, TIPS are government bonds that basically mirror the rise and fall of inflation. So for example, the interest rates that are actually paid on those bonds, if inflation goes up, like it did this year to 6.8%, then the interest rates will go up with it. If the interest rates fall, then with TIPS, the interest rate goes down. So you have the value of the bond plus the interest that it's paying. So anyway, just to let you know that, TIPS usually, TIPS bonds usually pay interest twice a year, and they do it at a fixed rate, and you can buy them, and they're issued on 5, 10, and 30-year maturities. So that's one way when we're dealing with inflation. TIPS are a place to go, so you can talk to somebody about that. Also, you can do short-term bonds, and that's basically by keeping your money in short-term bonds. The fact that they're short-term means that they come to maturity quickly, and if interest rates or inflation goes up and interest rates, of course, go up, then you can just reinvest with short-term bonds on a much quicker basis, and you're able to take advantage of that interest rate. Now, some people will say stocks are, but if you've heard me talk about this before, I really like dividend-paying stocks. I need to do a podcast just on dividend-paying stocks. But one of the things is if you buy the correct kind of stocks, they can be good as a long-term inflation hedge. And then there's some, as I said in a previous podcast, there's some stocks like consumer staple stocks that are out there. And consumer staple stocks have to do with stuff with basically staples and things that we use every day. We call them recession proof. You're going to buy certain kind of groceries. You're going to buy certain things for your home regardless of what inflation is happening. And so there's some consumer stocks. And then there's also in the consumer stock area, there's also dividend paying stocks. There's also stocks like oil stocks. Right now when inflation is happening, usually what we call the commodity ETFs, which many of those are invested in oil, gold, and then you can just get outright oil ETF. Remember, ETF stands for Exchange Traded Fund. I like those personally better than I do individual stocks. Some people disagree with that, but because they trade like a stock and they can be bought and sold identical to a stock, whereas in a mutual fund, when you invest in mutual funds, just remember with a mutual fund, if you go to sell that, usually when you pull the trigger to sell the mutual fund, usually money doesn't settle in your account for about 3 business days. Plus, there's all kind of intrinsic things that are built inside of mutual funds. One of those is having to pay taxes on money you actually didn't make. So that's something else. I need to do a podcast on that as well. But anyways, so if you get in the right kind of stocks, and you can reach out to us at wealthbuilders.org if you're interested in learning more about that. And then, of course, a great inflation hedge during an inflationary period is real estate. Now, like I said, I'm going to do a new podcast on real estate in this next podcast about some of the things that have really changed in the real estate market. But real estate traditionally does very well during periods of high inflation. And there's a couple of reasons for that. Well, the first one is with real estate, one of the things that happens is the actual property itself will go up with inflation. We call it protecting against inflation because the price of real estate will typically directly reflect almost what's happening with inflation in the market. But the other thing that happens during inflationary time, if you own investment real estate, is rents go up. Now, we don't know for sure what's going to happen in commercial real estate with people working from home and with all of the fallout that has happened with COVID, but we know people need a place to live. And so single family real estate is not going anywhere anytime soon. And that's why if you follow what we teach you in real estate and you get your rents right, you get your cash flow where you have the positive cash flow that you're supposed to have, and you use the rent rules we talk about, then you will do really well. So just remember, real estate, in my opinion, is one of the absolute best hedges against inflation. And then some of you have heard me talk about this, but gold. And so I think one of the things that's happened with gold is this year gold has not reflected, hasn't gone up in step with inflation. And I think one of the reasons for that is people have been putting their money in crypto. Now, that's not the only reason, but I believe that's one of the reasons is because crypto actually trades like gold. Some people call it digital gold. And so crypto is definitely trading like a commodity right now. At some point in the future, as it becomes more common, I don't think it'll trade near like a commodity itself. But anyway, so just remember, as a matter of fact, you can write that down. Crypto is one thing that you can put your money in. Now, I'm not advising you to do that by any stretch. I'm just saying it is kind of an alternative that people are using right now to gold. But I do believe crypto is in a huge bubble that I read to you earlier. And then the last one besides gold is what I call other commodities. And so that can be everything like oil, other kinds of precious metals, agricultural products. And so commodities, because those are the things that people, typically those are the things that people need to be able to live and to be able to have. And so they basically go up with inflation. Those prices either do better or usually match that. So we're in an unprecedented time. I know that this podcast has been a little longer, but it's our 50th podcast. So I want to remind you that we do have our Wealth Builders Conference, February the 18th through the 20th, 2022 in Lone Tree, Colorado at the Marriott. And I just want to tell you how much on this 50th podcast, how much I appreciate you listening. You have really helped us do things I never dreamed we would get to in my lifetime. And so I want you to know we appreciate that. So today I want to leave you, if I can find this quickly. I want to leave you with this verse. I thought I had it right here in front of me. Now I got to go find it. Let me see. I know I have it. Here it is. Where'd it go? Well, I'll just quote it. I just want to remind you that in the sons of Issachar had discerned their times. They were discerning of their times. And I just want you to understand and discern the times and the seasons we're in economically. And today I speak a blessing and increase over your life in Jesus' name. Amen.
We hope you learned something of lasting value today from this Wealth Builders podcast. If you'd like any tools, teachings, or resources mentioned in the podcast, you'll find them online at wealthbuilders.org. Wealth Builders exist to teach you how to build wealth through applied biblical wisdom in your finances, your business, and your investments. The Wealth Builders podcast is produced by Celine Williams, with music by Audio Jungle and narration by Greg Hunter. Wealth Builders is a nonprofit organization. We depend on your donations to keep this podcast running. Please consider donating to us on wealthbuilders.org.